problem in our industry with supply and demand, and not to beat the drum too hard on it, but we're going to talk about it a little bit more. So Graybrook, as Cynthia mentioned, is a pretty seasoned organization. We've been around for over 20 years. Generally speaking, most of our business has been in sort of the greater Golden Horseshoe in Ontario. And I'm always cognizant when I come to Vancouver to not talk too much about how great Toronto is and how great the greater Golden Horseshoe is, because it's definitely not perfect. Someone mentioned earlier that everyone wants to immigrate to Vancouver, and I share that sentiment. Every time I get to come out here, it's a treat for me, despite the rain, which seems to be pretty consistent. Graybrook as an organization, our built-out value is north of $35 billion, over 100 projects, with over $2 billion worth of assets under management. So as an organization, we've got a very strong level of expertise in residential build. So we are not doing purpose-built rental, which we've talked about quite a bit today. We are doing condominium sales predominantly. But we will talk about some of the different types of things we do and, the different markets we operate in. So as I mentioned, our focus historically has been the greater Golden Horseshoe, for a lot of the reasons that, others have talked about today. Tyler and Matt both sort of honed in on this huge amount of immigration that comes to Canada and the absolute dire straits we're in as it pertains to supply within these communities. We focus predominantly on areas where we can predict the growth and we see generally steady inbound immigration. So for us, that's Toronto, sort of east and west of the city, as far west as, we'll go to Kitchener probably, or Hamilton, and then as far east as Pickering or Ajax. We don't do too much really outside of those core areas. As we've grown as an organization, though, we have started to look at different things and different places, and recently, expanded into the United States. A pretty significant investment into the South Florida market, as well as other sort of sunshine smile communities. So Atlanta, Nashville, Denver, Southern United States, with pretty strong migration patterns. We have over 9,000 clients at Graybrook now. So as an organization, we continue to grow and continue to expand into these communities. We have three types of sort of projects that we offer as an organization. So our bread and butter really is the for sale residential. We have over 100 projects spread across Canada and the United States. In this particular market, we work with a lot of major developers to help bring these residential condos to market, as well as low-rise projects to market. As I mentioned, we saw this expansion to the United States, and really what it presented was a different type of asset class for us. So in the US, we generally do purpose-built condo / rental hybrids. We call them society living platforms. And it's a bit of a mixture of your traditional condominiums as well as a sort of amalgamated lifestyle brand rental, which is an interesting thing. And then we've recently kind of got back into the value add sector. So not a huge focus for us. We don't have a ton of value add projects, but we have got back into it, and we just closed a project in Atlanta. So there might actually be a couple of investors here who recently got into the Atlanta value add offering. So sort of what makes Graybrook work as an organization and how we've changed over the years is we've really pivoted from being a capital raising organization when we started, and that was all we were. We were out there raising funds for developers and participating in projects, but not necessarily so involved on the actual day-to-day, the asset management, that sort of thing. That's all changed. So as we've grown as an organization, our focus has changed quite a bit, and we are now more asset managers than really anything else. So while we do raise quite a bit of capital, and as I mentioned, we've got over $2 billion of AUM, which is quite impressive as an organization. Our focus is now really much more on the asset management side. So the acquisition of good, A+ assets, taking those assets from really nothing all the way to being developmental projects, and then working with the developers that we partner with to execute the build out of those projects and make our partnerships profitable. So on the acquisition side, and this is something that comes with experience as an organization, really, it's figuring out how we want to acquire properties and being very picky about said properties. We won't take any deals on that we don't think really check every box. And I talked to Taylor and Cynthia and Austin about this quite a bit. It's a bit of a frustrating endeavor if you're trying to figure out what our pipeline is like, because candidly, we won't bring anything to market if it's not perfect. So when we get the question, how many offerings will you do this year? The very frustrating answer is the good ones, which offers no guidance whatsoever. So it makes it tough for other organizations to plan with us. But the fact of it is we don't want to bring anything to market that isn't going to succeed. And there are a lot of variables. You heard Tyler and Matt talk about all of the different challenges that we have in this business and in this industry, whether it's zoning and entitlement, which in Toronto I can assure you is just as bad as it is in Vancouver. I live in Burlington, which is a suburb of Toronto. I wanted to extend a fence by 1 foot, and it took 9 months to get approval from the city of Burlington to raise my fence 1 foot. Just to give you some perspective, we've had projects where we've turned over, I think, 4 or 5 planners, city planners, during the duration of the planning period, which is just crazy. It takes away all of the flow of business. You're constantly working with new people who have new positions and new opinions on what should happen or could happen. So these are the challenges that we have to go through as an organization. And I don't want to blame it on the city, but I will. They're awful and they're killing us. And if you look at sort of, obviously, you guys, I'm sure saw a little bit of the Greenbelt controversy that happened in Ontario recently, and what a charming endeavor that was to navigate. It's not going to get any better. And, Matt said this a couple of times, and I hate to be doom and gloom about supply and the notion that we're going to get these 1.5 million houses in 10 years. It's impossible. And the city and the province, can say all of the things that are pro-development and pro-growth, and they definitely are acknowledging it a lot more these days than they have in the past. It's not going to happen. So, when we look at these properties and we're trying to acquire the right ones, we have to make sure that we're not going to be running into any of these challenges as we take it through the process. So, we're trying to mitigate that risk as best we possibly can. So when we talk about active asset management and what's something different that Greybrook does that we historically as a capital raiser we weren't so involved in, is the active management of the project. So our asset management team has grown from being 5 people when we started, 4 people when we started, to now being over 40 people who each manage a particular type of asset within our portfolio of business. So we have a low-rise department, we have a high-rise department, we've got a value-add department, and we have a US department. So within that sort of pod structure, we're watching and making sure that every project is going exactly how we envisioned it to go. We're working with the development partners to make sure that everything is sort of checking every box as we go through, that everything's on budget and as best within the timeframes as we can possibly have it. We'll talk about delays and all of those things, that's part of development. But the reality is we want to be on top of it and understand the delays and why they're happening, so we can help shepherd those projects through the process. The developers we work with in Ontario especially are really the who's who of the development game. Obviously, Vancouver is a very different market, and you'd have a lot of different regional builders here than you would in Toronto. But within Ontario, these are really the who's who. So, whether it's Tribute or Fieldgate, Stafford, Metropia, these are very big developers. In the US, we exclusively work with PMG. PMG is a massive US developer. They're building our Waldorf Astoria in Miami, which really will become probably the marquee building of the Eastern Seaboard. They've also, if you're familiar with New York at all, the Central Park, there's a Pencil building at the very foot of it. That's a PMG building. they just do a lot of different stuff, and we've seen great success with them in all of our projects in the United States. So as I kind of mentioned, we focus on three different types of projects. Fundamentally, our for sale development is our number one type of asset class, and we've had the most success with this, and we see the sort of the largest margins for us, which is great. It's great for us, and it's obviously great for our developers. What we do with this is we try to isolate projects that have good bones, that are within the urban boundary, and that we can take to fruition within a couple of years. Obviously, some projects are pretty big. I don't know if we definitely have a couple of clients in here who invested in our Hamilton offering, which is a multi-phase low-rise development in Hamilton. We're going to see probably 5 phases over the duration of 10 years. So that's one type of project, or it could be a tower type development, which is more of a 4 to 5 year project. So each one has different timeframes and different fundamentals that check different boxes for different investors. As I mentioned, we're kind of looking for sort of white belt land that we can take through the zoning process to improve the assets and then execute the construction. For us, the earlier we can get involved in a within urban boundary property, the better. It gives us the most flexibility to take that project from what we think is undervalued to add value to it, add zoning, add entitlement, and get it to where it needs to be. In some cases, we will sell it at that stage. We have a project launching hopefully this week in Cambridge, which we will not be building out. It is a land deal. We'll zone, entitle it, and sell it to a developer locally. This will be our second Cambridge project, and the first one we did that successfully took about 5 years. But in some cases, we will take it all the way through. So you zone the land, you entitle the land, you navigate the many dramas of the city of Toronto or whichever municipality we're working with, and we build it out. So different projects have different goals and different ideas, but generally speaking, that's how the for sale residential works. These are a couple of our buildings that you might see here. Some renderings, some actual pictures. The multifamily development, and I won't spend too much time on this as we haven't had an active one in almost a year. This is what I was mentioning when I talked about the US. So this whole platform, our Society Living platform, really caters to, I cautiously use this, the millennial type client, someone who does not want to drive, who spends a lot of time in their building. The gym is in the building, their WeWork is in the building, all of those different things, and the building really becomes their whole community. They don't necessarily go out, to the burbs. They don't need a car. They don't have a parking spot, et cetera. So we actually, in this case, have had a couple buildings exit. Ironically, we sold one to the previous owner of WeWork, which was funny. But it's an asset class that we constantly are looking for more opportunities to get involved with. It is very successful. It offers a great diversification regionally for our clients. And the US is a totally different type of market. It's not Canada. Things happen a lot faster. Development happens infinitely faster. And Matt kind of touched on that in the US with Texas. But really, most of the municipalities we're working with, the time to get something zoned in for construction to start is under a year. It, again, took me 9 months to zone a fence being raised in Burlington. So it gives you some perspective in the priorities of the government in the United States versus the priorities of the government in the GTA. This is just a little bit more on the Society platform. Again, it's very millennial. These are some of our units here. So the top left here, the Society Las Olas, that is a finished building. We stabilized that asset and sold it again to Dimitri from WeWork. That was the largest single transaction real estate purchase in South Florida history. And then I sort of touched on this. We've re-entered the value add space, not to be a focus for us. I think we would probably see 1 or 2 of these a year. And really, it's a subject of opportunity and answering some questions from clients. We want to provide to our clients what they're looking for. Obviously, yield is a very attractive asset, for people, and we are re-entered this sort of space. For us, unlike, Centurion and Matt and Tyler, we've focused on the US. Obviously, there's so many good fundamentals about rental in Ontario, in BC, so I won't go on those. But for us in the US, it gives us a lot of flexibility as landlords running this sort of business. We do not have to go through the rigmarole of rent control. We do not have to go through the rigmarole of evictions. It is a very easy, swift process. So for us and our clients, that caters to what we're looking for. We look for undervalued assets. We go in, spend, marginal amounts to improve units, raise rents, and then exit. We just completed a project in Atlanta, and hopefully we'll have another one of those within a year or so. Fingers crossed. The value add program is very typical to stuff you would have seen. You're fixing the amenities within the developments, whether it's pools, game rooms, lobbies, etc., adding some improvements to kitchens, bathrooms, basically all the things that people value most within their properties, and then moving on to a higher renting tenant. So again, this is where repetition will set in. Why do we invest in Southern Ontario? Candidly, there's just so much demand and no supply. We are able to go in and add value, immediately. There is a huge shortage of housing that, frankly, will not improve anytime soon. So for us, we look at that sort of supply demand. We look at the number of immigrations that are coming in, and we've touched on it. Whether it's students, whether it's professionals, the Ontario immigration numbers are staggering. There's no signs that it will slow in any capacity. Obviously in Canada, we see huge immigration either way, and it's a priority for our federal government, and provincially it is equally a priority. But as we've touched on already today, Ontario does get the bulk of these people, for whichever reason, whether it's employment, proximity to the airport, education. We have so many students coming into Ontario, and actually broadly, they're not considered when we look at the employment numbers. Students are not considered in that, though we do want most of them to stay, given obviously educated, hardworking, that whole demographic is the ideal sort of immigrants into the city. Matt touched on it earlier, but very multicultural society in the GTA, with lots of different sort of communities that were welcoming people. You won't be able to see a lot of these numbers, unfortunately. They're pretty small, but I can tell you the gist of it is people are moving into Ontario, and that's why we continue to focus on that market. I get asked a lot why we're not in Vancouver or BC or Alberta. And, I think with BC, while obviously it's beautiful and it's amazing and most people do want to move here, it's just, we kind of missed the boat on it. It's hard to acquire good land here at a price that makes sense for us and our model. So we're not here. In Alberta, it's a little too cyclical for us. There's still this heavy emphasis on one industry, and then, everything kind of goes with how that industry goes. So as we look at, Ontario and the diversification of industries, it checks those boxes for us. Like, we want to see a very diverse amount of employment opportunities, different industries, whether it's tech, resources, whatever it is. We want to have a lot of diversity there, and Alberta just doesn't offer that yet. It does have affordability today, but if we look at sort of a 20-year picture, a snapshot of Alberta, affordability goes away very quickly as the energy sector grows, and then as the energy sector contracts, affordability comes right back. So, we just don't like that variability in the marketplace, and won't be expanding there anytime soon. Again, we can talk a little bit about the Greenbelt. The Greenbelt is a disaster as we know it. How it was handled by the Ontario government is tragic. An entire I think we're 25 years into the Greenbelt, and they decided in, a matter of 6 weeks how they were going to approach the future of it. Not ideal, but it has obviously exposed a couple things. So, the idea of the Greenbelt and what the provincial government was trying to do with it, let's take away the idea of the developers making $8 billion or whatever it was expand housing. And the fact is we do need more housing in Ontario, and the Greenbelt is a huge constraint of that. It is what it is. So we have to find new ways to get beyond that Greenbelt. Like, how can we figure out how to make things work? Whether that's moving further west into the sort of Kitchener, Cambridge, Hamilton area, or further east, whether it's going more vertical, higher density, whatever the case may be. That's a challenge that we have to work with and try to mitigate, the risks that come with that. So, for us at Graybrook, we focus on that and how we can conquer that sort of challenge. Again, the shortage of housing is crazy in Ontario. It's shocking. We have all these people coming in. There's no affordability, and really, there's no supply. We can beat this horse dead. Everyone's talked about it. It's not going to get any better until we figure out, some solutions, whether it's making our governments move faster on a federal, on a provincial, on a municipal level. They have to communicate better. There's a lot of challenges. And, as Matt mentioned, the GST reduction is not going to fix things in the short term. It is going to take time, and we need real buy-in from all of our municipalities to make this work. We're starting to see some narrative in Toronto, at the very least, that is positive, that the city is much more cognizant that there's a challenge and they're trying to get there. I don't know if our recent municipal election will help it. Olivia Chow has a different approach to development than most of the other candidates, but we will see how it goes. We can talk about sort of the ups and downs in the market. I think we all realize that until interest rates come back in line with historical averages and a cost of living that allows people to do things, the market is not going to get necessarily very spicy. It would be great if we had some clarity on that. Recently, just last week, we had the chief economist from BMO at a corporate event that we put on every year. And, BMO is pricing in a sort of June, July interest rate reduction, which is, I think, ambitious. I think, as long as we don't see any growth in rates over the next couple of months, I would consider that a victory. I think we're going to be stuck here for a while on high rates. But, I think as the market goes, some stability in the rate hikes would really help kind of drive the market up a little bit again. So the model of investing in Graybrook is pretty simple. We partner with the developer directly into an LP. It's, generally speaking, 80 or 85% LP, 15 to 20% developer. We partner right into it, and we share the profits as an organization. This is a typical sort of portfolio that we try to encourage with our clients. I'm getting like the time hooks coming up, but what we do at Graybrook and why we offer so many diversified types of products is we want clients to diversify across a number of different types of asset classes, whether it's regionally, density type, whatever it is. So we want people to have a value add. We want people to have a high rise. We want people to have a low rise. We want them to be in different cities, different time frames, diversify across a number of different asset classes. And you get the type of portfolio that we're looking for our clients to have. And that's an example of it right here. And that's it.